Hello and welcome to another update video about gold. So as we're heading into a new trading week, we can see that the gold market is correcting a little bit. Or it started actually last week already. The interpretation overall hasn't changed. The support area, however, that we added to the chart last week shifts up a little bit. The move to the upside could turn into a bit of an impulse. So instead of a diagonal that I'm tracking here, I'm considering that maybe it's an impulse, but it doesn't really make a great difference. I'm rather give it a little bit more space, because from this B wave low that formed early in September, the initial rally for me looks more like a three-wave move, ABC, and then we had an ABC pullback. The thing is, I could, if I really wanted to, count the move up initially as five-wave move, but place the one here. Then it would have been probably a diagonal itself. 1, 2, 3, 4, 5. And then this was a wave 2 pullback, and we're now in a third wave. 1, 2, 3, 4, 5. Okay, and would it make a great difference? No, it would just mean that we might have to watch out for a rather shallow pullback potentially, and I will mark that onto the chart now. So that's the white count here, which I'm labeling as a diagonal, right? The other count, which I just explained, would be here. It would be an impulse. So you see it's the same pretty much. It's just a slightly different subwave count. Like that. And in this case, the price in this yellow 4 shouldn't really break below 2006.39. Well, if it does, it's more clearly the white count where the B wave actually has space down to 2600. Well, that's not correct. It actually could go down a little bit lower. The invalidation point is at 2570, which is the 18th of September low. That's the invalidation point. The support area is here between 2600 and 2655. Partially, you know, it covers the yellow area, the yellow wave count, but as I said, below the 50% retracement, it's a bit too deep for the yellow wave 4. Then it would more clearly be the B wave in white. Below 2600, it's possibly something more bearish, but the formal invalidation point is down here at around 2570. There's a difference between ideal support and invalidation. So that's what I'm tracking at the moment. Is it possible to maybe draw a trend line here? Nah, not really one that is really relevant, I think. No, let's leave that. Fibonacci support is clear. Pullback at the moment looks corrective. I'm watching for a little lower this week, but it shouldn't break below 2600, or my assumption of a more direct pathway to the upside isn't correct, and we need to prepare for a bit of a more of a pullback. But that's absolutely at the moment nothing too noteworthy. Yep, it's pulling back, but we had an amazing rally into last week's high. So overall expectation is for it to push higher into the 2800, 2900 region over the coming months. As part of this larger diagonal pattern that I'm tracking, a break below 2600 would be a first indication that something is morphing, but it wouldn't yet be bearish, okay? Much more would need to happen for that. So that means at the moment, in the very short term, I'm watching for a little lower. We can also here on the 30-minute chart add a microstructure to the chart. The thing is only that I'm already really working with the smallest wave degree on TradingView. So I'm just gonna raise that by 1. And the idea would be this could be an A wave. We might be still working on a B wave and then come down in wave C. Reason I say that is this here looks like 3 waves down. Could be wave A. This was a bit weak for B, but possible. But ideally we get a larger B before we go down in wave C. And that's sort of how I see the market at the moment. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out the stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.